All right, good afternoon. This is a weekly outlook for the week ahead, 621 to 626. We have a full week this week, which is very good. It's very interesting. It's the week after OPex. So, new money, new orders, new contracts, just an influx of volume should come in. Now, the one thing I realized is that at the end of the trading day on Thursday is we had very significant amount of short volume. It failed to break resistance, which was at the top here. Interest rate came in from uh, Asia market, which led us into a downtrend. Now, we did retrace that trend 50%. We closed just within those range. We closed under point of control. I have heard that the Strait of Hormuz is now closed again, so obviously that's going to apply some pressure to the markets. If oil spikes, uh, we're going to be looking at a range of maybe 79, maybe a gap fill, maybe back to 80, high mids 80s. I I think this range has some liquidity. We might see even high 80s. As far as I'm concerned, equal highs, point of control, 90s would be probably the top. Everything else after that has been filled. So I don't see it go any higher than the point of control, but we do have a excellent range of price where we can really apply pressure to the market. So if we do open in the highs and above 200T on oil, we're going to go and fetch all that liquidity here with some resistance. But ultimately, I think that's where we're going to close the week on oil. That'll apply pressure to the indices. DXY is on a topping pattern, so that we should get some rest from the dollar ramping up. It did ramp up because of the FOMC meeting. All of that happened on Wednesday. Obviously, 200T will be our support, but I think we might just go revisit the low hundreds, maybe under. I see it coming back down to the neckline, but that's a topping pattern to me. I believe dollars should fall, so that should give a little bit of rest to the indices. That being said, I think oil is going to be the pressure here more than the dollar. Same for VIX. VIX has closed below 200T. It's still kind of close, but it's still closed in a low range. If it remains below 16.83, it might continue lower and give us a little bit of a break. Again, if oil ramps up, we are going to look at some more downside. It won't matter. VIX should shoot up. I don't see VIX above 1830, but it like this range right here is going to be where I'm going to look for VIX to be. So this is probably going to be a roughly 17% move for the week as far as the VIX. I'm not looking at any stocks this week. It is the week after OPEX. I want to see what people are willing to buy. I want to see the caught. I want to see the where's the volume going. We're coming out of the back of SpaceX IPO. It has seen the most amount of volume, like billions and billions of shares have been traded. That's I'd rather play it safe. Give me a window of time before sending any type of options. Uh, I have found a list of stocks that would benefit from the reopening of the Strait of Hormuz. I have limited all those stocks. I've literally limited every single one of those stocks already at a price where I feel is decent. That being said, a lot of those stocks are from energy and material infrastructure. They would benefit from the transport being back to normal. Now, because the strait is closed again, for how long? I don't know. Could we see lower lows? Yes, that's possible. Am I worried? No, because I have a 30% maximum risk per trade. So if if it goes down 30%, then I get stopped out, and so be it. At this point, I want to be in those stocks. That's all I care about. I want to be in those stocks because the Strait of Hormuz is not going to be closed for the rest of our lives. At some point, it'll be reopened. It'll be maybe not back to normal, but it'll be close to normal. And those stocks are going to ramp up again. They had some good patterns on the daily time frame on most of them. So I'm looking forward to at least some gains from those stocks. That being said, I will adjust these levels as soon as London is open. To me, that's a clean higher low. That's our lower low, under over. And I say potentially could go back over here, 676.90, and fill up this area here. That's best case scenario. According to the macroeconomic data, there's a 27% chance that we are bullish and closing the month of June in the green. Now, closing it in green would be going all the way up here and pass all-time high because we have hit all-time highs. As far as right now, gaps have been filled. That's the most important part. We filled up those gaps. Now, next step is we need to close above 76.50. 76.50 is probably going to be our call wall. I can assure you, if I look it up right now, that's going to be the call wall. We need to break those highs. If we are stopping over here at 76.10, we're likely going to continue lower. We failed to close below 200T, and we have not closed below 200T for a while. So I'm thinking that if we are closing below, we're going to look for a lower low. I wouldn't be surprised if we go all the way down to 72 or 73.50 again. I'm at this point, I'm looking for a higher high off the previous swing high or a lower low. If we are in the lower low, this support here is going to give out, and we're going to likely go inside and touch these lower daily and lower weekly expected move. I want to see what oil is going to give me. If oil is up, pressure is on, market's going to fall. We did close the daily on a hammer. We are technically still bullish because we came out of a support block until oil applies pressure to the market. So again, all depends on weekly open in 45 minutes. From that point, I'll have more answers, and I'll do another weekly video for probably tomorrow whenever I get more answers, more info from the market, more data from the market. But as far as I'm concerned, there's potential up, there's potential down. We're more likely to be bullish based on the reaction of the past data, but we are more likely to be bearish because the Strait of Hormuz is closed and oil might ramp up. Because it's neutral, it's a head to head, it's data against market structure. I'm not going to play this. I'm a defensive trader. I don't want to play head to head. I want to play clear data, clear information. So my best bet here is to wait. We're above gamma. Buy the dip, sell the rip sentiment. So as far as I'm concerned, it's a waiting game. I'm waiting. I'm patient. I'm going to be waiting. And so should you. Beside that, that's all I have. I'm not much of a reckless trader. I'd rather wait. I mean, NQ is very close from its top end. I mean, roughly 220 points. I want to see this high breaks. This high breaks, we're good. We should be going for all-time high. If not, then we're going to be ranging inside this candle here. And if that breaks, if previous week high breaks, we're likely going for support again, retest of support again. But the gaps have been filled on both. All we're looking at right now is data. We're just waiting. We need a higher high. We need to structure a higher high that's going to confirm that the higher low is a clean higher low, and that's a clean support for buyers to push it further up. But until then, that's we need a higher high to confirm that. Until then, we're in range. Clearly, we've been ranging here. Like that's all it is. It's 1,000 point range. So in a couple days, we'll know which side is where we're going. Beside that, it's just chill. That's all it is.